this clearly shows that Burry is not just chasing expensive stocks or whatever's popular on investing Twitter or X. So first off, it's interesting to look at the sectors that Burry has been buying up, and this is a chart of all of Burry's recent buys. It's a very big change from the targeted bets he's made in the past against specific industries like tech. His biggest positions are now in the healthcare market, over $10 million into Bruker Corp, United Health, and over $100 million into Regeneron Pharmaceuticals, if we count call options. It's a really big bet on healthcare. Now, healthcare is traditionally a defensive stocks industry, meaning it performs well if the economy drops. Defensive stocks also tend to be much more stable in a volatile market, because if you need medicine or medical treatment, you can't just stop buying them if the economy drops. But this doesn't just look like a bet on a market drop to me. If we look at Burry's other trades, it looks like he's doing something deeper. See, at the same time as he bought these defensive healthcare stocks, he also sold stocks in another defensive industry. Burry actually reduced his position in the consumer staples market, which is something that you would normally want to hold during a downturn. And at the same time, he opened up new positions in consumer discretionary stocks Lululemon and Mercado Libre, which are the opposite of defensive, because in a market downturn, expensive leggings are probably one of the first areas where people will stop spending. At least you hope. So at least at an industry level, it's a mix. Burry holds stocks that will do well in a market downturn, but he's also investing tens of millions into cyclical stocks that rely on a strong economy to grow. And this seems to show that Burry is more interested in the type of stock than the industry that they're in. And there seem to be three patterns that make up Burry's playbook for why he bought the 6 stocks that he purchased. So let's walk through each of these 3 patterns using this report and focusing on just his long-term ownership plays. So let's start at the first pattern they all have in common by looking at their recent stock price performance. Burry bought $11.9 million in the clothing brand Lululemon, a stock that's down over 50% in the past year after the company has struggled amid slowing US sales and a brand that feels safe and predictable after 27 years in business. Lululemon is clearly a beaten down stock, and it's not the only one. We saw he has a big holding in United Health, a stock that's dropped 60% from its peak. Regeneron Pharmaceuticals, down 50% in the past year. Mercado Libre, not down, but certainly underperforming the broader tech market, which is up more than 20% in the past year. And we see the same pattern in his 2 other holdings, Estee Lauder and Bruker Corporation. So of the stocks Burry has recently bought positions in, the average is down over the past year, and most are down over 50%. Now, this clearly shows that Burry is not just chasing expensive stocks or whatever's popular on investing Twitter or X. The market may be at all-time highs, but Burry is focusing on the areas that are still cheap. This is the first lesson in Burry's playbook.